Thursday, December 29th, Stan Ehrlich. This is market analysis. And today I'm going to do things a little bit differently. We're, of course, going to start out with the stock market indexes. I always analyze the S&P 500, the SPDR specifically, the Dow Jones, the DIA specifically, and the NASDAQ QQQ specifically. Sometimes I throw in the Russell 2000 if there's something interesting about the Russell. So, looking at the S&P 500, we have a minor upside breakout this morning. This is a new high and currently holding slightly above the previous 4 days of trading range. Not that that's particularly profound, but look, this market gapped down twice, got oversold on the 20th of December, just before I split for Christmas with the family, and went essentially sideways in this little trading range, and now is starting to poke its head above previous rally highs. We need to maintain 383.40 or higher, and we're there right now, 383.50, in order to have a breakout on a closing basis. Closing back below 383.40 is not necessarily bad. It's not good enough. You want to have new highs and a new high close above previous rally highs to be a really good, legitimate breakout. Most of those work very well. On the downside, yesterday, it looked pretty bad, as I alluded to in my market letter and ER signals report. And it wasn't. It didn't close below the previous lows. Plus, we had been oversold just a few days earlier. So it was a little bit of a trick. So I think we're on our way up, crossing my fingers. I want to close above the high of the last 2 weeks, which would be above the rally high on, let's get that price, December 21st, and the high was 387.41. So call it 387.5 or more. And then we certainly have a minor bottom, which is going to lead to more strength. There's a gap to close in that ballpark area, 386.5 approximately. There's a small half-point gap. And there's a small gap also around 395.5. You're going to bump against some significant overhead resistance problems at 393. So I am expecting 393, which is only 10 points higher than our current quote, 383.80. So I think that's going to be easy, maybe the next day or two. Now, tomorrow, of course, is the last trading day of 2022. Happy New Year, everybody. Hope you had a great Christmas. And yes, myself, my wife, and my son got caught in a Southwest Airlines debacle. We had to rent a car and take an extra half day to get home from Southern Cal up to Northern Cal, California. Now, let's take a look at the DIA. Now, remember, the S&P is kind of in the middle between the Dow Jones, which has in the last several months been the strongest, rallied the most, greater percentage, broke some trend lines, etc., while the QQQ was the weakest, couldn't get its rear end off the ground, and came back down closer to the lowest lows for the year the most easily. So here we go with the DIA and daily data chart. And you can see I like vertical bar charts. I'm old school, been at this half a century, plus a few more. We're not quite a new high ground for the last 2 weeks, but close. We got the second highest closing price if we stay here. And the lows held on the downside corrections. So you have a little minor double bottom in this trading range. And it's looking okay. It's looking very good. We just need a little bit more strength to have that breakout like the S&P is in the process, I hope, of doing. And remember, it has to stay there. 383.30 on the SPDR or higher on a closing basis. Now, Looking good, and I wouldn't be surprised if by the close, and this is 10:20 California time at the moment, recording fairly late today, sorry, and I like what I see. We're fairly close to resistance, but that should be penetrated to a significant degree because this trading range is not significantly below the resistance. It doesn't have far to go to start poking up above it again, into the resistance area again. Yeah, that looks fine. And the QQQs. Now, remember, they've been the weakest, probably because of interest rates rising. And these are the least well-financed corporations, the QQQ, as opposed to the DIA, which is the big industrials. And they're the most well-financed, if that's the correct way to say it, adequately financed. And so it's kind of explainable that the Dow Jones didn't come down quite as much or as badly or as fast, et cetera, as the Qs did when interest rates went skyrocketing in the last year. Now, we're fairly close to the lowest lows for the whole darn bear market, which again started at the very beginning of January of this year. So it's been all year long. I think it was January 5th or January 4th that the top of the market was in two of these indexes. Actually, what was that date? Well, this was November 22nd for the Qs, but it was right over here, I think, that the DIA and the Dow Jones topped out January 4th. Okay. So with the Qs, they ended up double topping out, double top. We did pick the highest high with the red bearish engulfing. That is an ER signal. That's my automated trading system, which is going to be available shortly for TradeStation and Ninja Trader. I like what I see here. There's no trading range really per se in the QQQs. They only slid and kept sliding and making new lows and new low closes, while the other two indexes did form somewhat of a sideways trading range, best seen in the spider. So that's my opinion for the various indexes. We could have a broad potential double bottom in the DIA. We could have a fairly sloppy, not great looking bottom in the Qs. And in the spider, which I'm going to go back to again, my favorite, we, the market, may be forming a head and shoulder bottom. It's a little premature for me to talk about this. I think my numbers came out to be early February for the last low. So what you do is you take the lowest low here back in June 17th and you measure the amount of time, X number of days until the bottom of the market, which of course was October 13th. I told you the October lows are coming 2 months in advance. I detailed the process in advance, and boy, did I get what I wanted. It was Christmas early. So we had a gigantic buy signal October 13th that produced a 2-month good rally with the usual minor corrections involved. Now, what happens if in February we're back down to approximately 365? The timing would be right, the price would be right, and the neckline would be the major bear trend line we already have with a minor modification because of this particular high recently on December 13th. But that's no big deal. That only flattens out the neckline a slight bit. It's really, are we going to have a decisive, significant bottom forming in the next 2 months? That's the question. This seems to be a little small so far and a little bit too early so far as this trading range is concerned that we're trying to, break out of right now. But I'm getting a little bit more detailed timing-wise and price-wise for this last potential. Don't go calling your friends and telling them the market's bottoming out yet. Potential last shoulder low. If it develops like I think it might at late January, sometime in February, the timing doesn't have to be exact. This is a big formation. It should lead to a very long-term, major investor type bull market. Period. If it works. All right. Let's go to commodities, guys. Before that, wait. Santa Claus rally. Hey, talked about this before it started happening. It's now well in progress. We bought 1/3 of our position 3 business days before Christmas, another 2 business days before Christmas, another 1 business day before Christmas at a very specific time of day exactly. Here are the lines indicating, and they're just slightly out of kilter. They're manually drawn. They're not automatic. But one is a slight loss to the red line, and it's the first position that we bought. The second and the third positions are now profitable, and significantly so. So combining the 3, we have a profit on the Santa Claus rally at the moment, and the possibility of a minor upside breakout if we maintain 383, 30, 40 on a closing basis. And here we are, 383.60. But again, we got an hour and a half to go, which is tons of time for this thing to deteriorate and go down or up. I'll vote up. Let's see what happens. Commodities, commodity futures. There are 21 charts here. I'm going to go through them pretty quickly and really only make comments about the current situation and or any buy or sell signals we've had in the last week or two. Long-term breakout to the upside. Looks like it's going to make new highs on soybean meal. Next chart. Cocoa. We had a bearish engulfing yesterday. I told you this market should start to go down. It is going down so far today, and a pretty good break at that. So the signal's working just perfectly. We also had one not too long ago, November 11th. That's cocoa. Next, crude light. New lows for an extended period of time, many months recently, but it got oversold. So it deserved a bounce. We've had a bounce. It didn't get overbought, doesn't necessarily have to get overbought. It got up against resistance and is starting to turn down. I think this is going Tierra del Fuego, heading south. Let's see what happens. Exact opposite here for live cattle, but we're getting overbought today. We're overbought. We're getting above and turning red on the RSI. And yes, this is an RSI subchart. It is a customized version of Wells Wilder's original RSI developed in the late 1960s. I knew the man personally, lectured at the same seminars for decades with him and many other guys and gals. And nice guy. I think he passed away a year or 2 ago in New Zealand. Thank you for teaching me this, Wells Wilder. Appreciate it. My favorite indicator, RSI. I customized it. So I'm expecting a minor correction, looking for a little bit of a dip down to probably 156 and small change, and then back up again. Next, in natural gas, woo, down we go. New low close, but hey, this is no place to go short. It is oversold. I'm expecting it to start to bounce very soon. Sometimes oversold conditions like back here on October 18th end up producing more than one day. Next day it was further oversold again and again and again. So it took a week for it to finally turn back up. So it's a little tricky at times. And when you get overbought, it's the same situation like it was back on July 21, started to get overbought. And then the next day, the same, and climbed and climbed and climbed. But finally it turned down. So you need to wait for that trigger to get into a trade if you're using some of these tools. Not with the ER signal. That produces the trigger for you. And that was a great sell signal at the top of the natural gas market for the year. Next chart. High-grade copper. Nothing happening. Slight uptrend. Boring. Next chart. Platinum. Sideways trading range, but the trend is up. And now that we've had a bit of a sideways for a couple of months, I think this thing is ready to shoot up into new high ground again. Bullish. Next. Bond. Futures. I did talk about this market forming a head and shoulder bottom. I did talk about it going up to a minimum upside objective of 128. I did talk about the historical resistance area that it was bumping up against and the bearish engulfing, which didn't work exactly the way it should have, but it's part of the topping out process occasionally. Usually I like them like that one right there, the top day of the trend and the bottom day of a downtrend. Those are the signals that this system is built for. The ER signals, trading system. ER stands for Ehrlich reversal. Next. A little oversold for the last couple of days. Probably going to stabilize a little here. Maybe even come back up a little bit. But we'll see. I think bonds, futures here, are actually forming a very long-term bottom formation, but it will take weeks, if not months, for me to be convinced that that hunch, which it is at the moment, is correct. So longer-term neutral, looking for a bottom, but right now, oversold, looking for a minor little rally for a few days. Next, 10-year notes, same story. No change of opinion. Same thing as bonds, essentially. Next, I've got the wheat market. And I almost always point out how incredible this ER sell signal was back in March 8th of this year, which was the end day of a series of limit up bid, locked limit up all day long because of the beginning of the war. Series of days. And all of a sudden it turned around. It turned red because of being overbought with a bearish engulfing. Bingo, I've got my signal. And wow, what a quick crash. Lasting just a few days, but a lot. That's wheat. Next, live hogs. Good buy signal here. Not so good there. Sell signal good. Hey, we got the high of the year. Sell signal way back on what was that, February 23rd, and another whopper of a sell signal back here on March 31st. Right now, a little bit of resistance, starting to pull back down slightly. I think this stands a very good chance of going sideways to higher. I'm going to vote modestly bullish on hogs. Next, the E-mini is the stock market index, but of course it's a futures contract as well. So that's why it's in this group of futures contracts. We have the bottom of the market, October 13th, just like the spider and the DIA and the QQQ and many other stocks, symbols, indicators. Wow, a whole mess of stuff, sectors. So I'm looking for this E-mini to stabilize and start to move back up again. Just a moment. I got a problem here. Why is this doesn't look like the rest of them? This is only up to December 16th. I have to investigate this. I apologize. This is not right. This is not up to date. I'm missing the whole sideways trading range for the last 2 weeks. I don't know why this is not updating. I'll check that out. So next chart, sugar. Got overbought, talked about that. We've had a downside correction back into some support. I think we're probably ready to start to go up into new high ground very, very soon in sugar. Next, coffee. Bear market. Picked the bottom of the crash. Well, picked the bottom of the bear move. And it ended up being a double bottom. Now I'm looking for minor resistance to be broken. You need to close above 175, probably in the next few days. And we'll get another leg up to 195 area, I think. So modestly friendly on coffee at the moment, but the long-term trend is still down. So after the rally, if I get it, would be a very good short sale potentially. Next, OJ got overbought at the top, settling back into some trading range support area. Not oversold, but I think we're going to see it stabilize and start to rally into new high ground for OJ. Next, silver. Trend is up. I think it's going to break into new high ground very soon, next few days. Next, corn. I talked about this ER buy signal on December 7th. We caught the bottom of the corn market. Now it's rallied so much from 640 to 680 that we have gotten overbought. So it's not a good time to be a buyer. I think it'll settle back down probably to 665-ish and then start to move back up again. Maybe not. Settle back to 665, 655 potentially. Then we'll see what happens. The trend is down on a longer term basis. That's what made me rethink that comment. Next, bean oil. Caught the bottom of the bean oil December 12th. Bullish engulfing, oversold conditions, ER signal, automated 100%. You don't do nothing but sit back and watch. Next, gold. Neutral to bullish. Next, soybeans. Just flat out neutral. Heating oil. Fairly neutral. Big sideways trading range for a long time. I can say this about these last few charts that we saw that were, long-term sideways trading ranges. When you start to break out of a trading range that's multiple months in size, you're going to get a very big move up or down. It depends on the breakout. So something to pay attention to for later big potential trades. Next, soybean meal, bullish, and I think we have covered these charts already. So yep, that's it for today, Thursday. What the heck is it? The 29th? Yep, of December. And thank you very much, Stan Ehrlich. You have a great New Year's. Hope your holidays have been good and didn't get caught up in the Southwest Airlines debacle like I did. Talk to you tomorrow. Bye-bye.